Areit Inc. Ayala Land raises P6.58B through block sale of Areit shares. Ayala Land Inc. ALI, one of the largest property developers in the Philippines, has successfully raised P6.58 billion through a block sale of shares in Areit Inc., a real estate investment trust owned by the Ayala family. The sale, which consisted of 205 million shares at a price of P32.10 per share, is part of ALI's P22.5 billion property for share swap transaction with Areit. As the sponsor and controlling shareholder of Areit, ALI said the proceeds from the block sale would be settled on April 3 under the placement agreement. Additionally, the company has promised to provide a comprehensive reinvestment plan outlining the use of the proceeds from the share sale transaction in the near future.
Under the terms of the share swap deal, Areit will acquire prime office buildings and malls worth P22.48 billion from ALI, located in the heart of the Makati Central Business District.
These assets include 1 Ayala Avenue East and West BPO Towers, Glorieta 1 and 2 Mall Wing, BPO buildings at Ayala Center, and the Marquee Mall in Angeles, Pampanga.
SPNEC. SP New Energy Corporation. You complete me. Levist picks MVP over total. KEPCO. Mitsubishi is Big Brother to fulfill SPNEC's vision to be a solar powerhouse. Millennial billionaire Lean Levist was reportedly in talks with some of the world's biggest players in renewable energy before he chose Metro Pacific Investments MPI, led by Manny V. Pangilinan as his partner in SP New Energy Corp. SPNEC.
A babbler said the signing between Leviste and Pangilinan for MPI's P2 billion investment in SPNEC came after the Yale dropout had negotiated for the past several years not only with some of the world's biggest fund managers but some of the big boys in power, specifically Total of France, Mitsubishi of Japan, and Korea Electric Power Company, KEPCO.
Levist was looking for more than a financial investor but a strategic partner-operator to help build solar projects. Levist had discussions with KEPCO and Mitsubishi, who were already partners with SPNEC in solar farms. But the most eager is Total, one of the world's biggest investors in renewable energy, which is aggressively trying to get into the Philippines, babbler said.
Babbler said Leviste was aware of the pitfalls of getting a financial partner, which could abandon the company after seeing its convertible shares grow in value, because his game plan required somebody for the long haul.
Babbler said Levist saw MPI as the perfect fit, not only because of its diverse infrastructure holdings, specifically in power distribution, Manila Electric Company, and generation, San Buenaventura Power, Cebu Energy, Panay Energy, Toledo Power, Panay Power, GBH Power, and Sarangani Energy.
With MPI, Leviste would get Pangilinan as chairman to add more gravity to SPNEC to pull in the big banks and big-name investors to fulfill his grand plan. He, Pangilinan, is not just an angel investor but a big brother to Leviste at a critical point in his road to building the biggest solar power firm not only in the Philippines, but in Asia. He ties everything up for Lean, a babbler said.
SPNEC can now sit with more confidence on the table with its other big-name partners, prime power of ultra-billionaire Ricky Razon, ACEN of the Ayala family, Aboitiz Power and Korea Electric Power Corp. KEPCO.
SPNEC can potentially build at least 2 mammoth solar projects with his gilt-edged backers, babbler said. The deal is also a big win for as its investment in SPNEC will give a boost to its re-expansion, which could start delivering power in 2 to 3 years. Meralco was the first to give SPNEC large contracts 7 years ago.
Babbler said Leviste's long-standing ties with Pangilinan also made it easier for him to pick MPI. Leviste's first and only job was as an intern in Meralco in 2013, or a year before he put up SPNEC's parent, Solar Philippines.
Mer Manila Electric Company Meralco signs emergency power supply deal with SMC unit for 300 MW baseload capacity. Utility giant Manila Electric Company, Meralco, has inked an emergency power supply agreement, EPSA, with South Premier Power Corporation, SPPC, for a one-year supply of 300 MW baseload capacity.
SPPC is a subsidiary of San Miguel Global Power. Meralco disclosed that the EPSA, which took effect on March 26, was exempted from the competitive selection process (CSP) after receiving certification from the Department of Energy (DOE).
Meralco said that the EPSA comprises a two-part tariff consisting of a fixed cost of P1.75 per kilowatt-hour and a variable cost indexed on fuel price movements.
The power retailer clarified that this arrangement will partly substitute the capacity covered by its 2019 PSA with SPPC, which was previously put on hold due to a writ of preliminary injunction issued by the Court of Appeals.
Meralco underscored that the implementation of the EPSA will safeguard consumers from volatile and potentially higher generation costs in the wholesale electricity spot market, especially during the dry season when power demand surges. The company is also seeking the DOE's approval for another EPSA, which will cover its 180 MW baseload capacity requirement. Despite conducting 2 rounds of CSPs, both attempts failed to attract bidders.
Therefore, Meralco applied for an EPSA instead to address the pressing need for additional supply during the dry season.
Meralco emphasized that it is taking steps to manage challenging circumstances and mitigate any impact on power rates for its over 7.6 million consumers. Telephone PLDT, Inc., who will take the fall for the P48 billion spending scandal. MVP to decide soon on fate of Annabelle Chua, other PLDT officials, on leave.
Will they stay or will they go? This is the question facing PLDT CFO Annabelle Chua and other unnamed executives who were made to go on paid vacation after the telco revealed the P48 billion overspending scandal 3 months ago.
In a March 29 report to the Philippine Stock Exchange, PLDT said, employees who were placed on paid leave remain on paid leave at this time. PLDT has not reached a final decision regarding the future of those individuals at the company. Now that forensic review is substantially complete, PLDT expects to address the status of the employees placed on leave soon, it added. Pangilinan had promised the media he would announce the status of the affected employees on March 24.
Except for Chua, PLDT has not identified other officials who were made to go on leave with pay since disclosing the budget overrun on December 16. PLDT was only forced to name Chua after it was asked by the PSE to confirm a Billionario.com report that the longtime CFO has been allegedly suspended.
Chua did not sign PLDT's 2022 annual financial statement, which was submitted to regulators last week. Chua has been replaced by PLDT controller Danny Yu as company's principal financial officer in the AFS. PLDT is currently facing a class action lawsuit in the U.S. for allegedly misleading investors on the P48 billion budget overrun which it incurred from 2019 to 2022. Pangilinan was president and CEO of the company from 2019 to 2021. PLDT is claiming that it has been able to reduce its outstanding commitments to vendors to P33 billion, with discussions for 20% of its capex budget as of 2022 still to be negotiated.
UBP, Union Bank of the Philippines, Inc. Another pre-need firm bites the dust. Aboita's owned First Union Plans goes bust. A pre-need company owned by the billionario Aboita's clan is folding up after 20 years in the business.
First Union Plans, Inc., FUPI, a subsidiary of UBP Capital-owned First Union Direct, announced it is ceasing its operations in a notice published on March 29 in National Broadsheet. The firm, which offered pension and educational plans, said it is in the process of surrendering its license and registration to the Securities and Exchange Commission. Notice is hereby given that the Board of Directors of FUPI has, by a majority vote, as ratified by stockholders owning at least 2/3 of the outstanding capital stock, resolved to voluntarily cease and withdraw its pre-need business. The notice signed by FUPI President Romeo Kagalingen read. The request to withdraw its certificate to operate is pending before the SEC, the company added.
First Union was established in 2000 with a paid-up capital of $70 million. It was granted a license to sell by the Securities and Exchange Commission that same year.
Several Philippine pre-need firms have collapsed in the aftermath of the 1997 Asian financial crisis. Among them were the College Assurance Plan, CAP, Pacific Plans Inc., and Prudential Life Plans Inc., PPI. Dhl Industries, Inc., Dhl. Strong exports and diversified businesses propel Lau family's Dhl Industries to all-time high earnings in 2022. Dhl Industries Inc., a major player in food ingredients and plastics manufacturing owned by the Lau family, achieved a record net income of $3.3 billion last year, up by 26%, due to strong consumer spending and diversified businesses amid the continued reopening of the economy.
In the fourth quarter alone, the company's earnings jumped by 62% to $777 million, exceeding expectations, as its three main business segments reported either record highs or slightly below.
The exports division continued its positive momentum, with revenues jumping 33% as coconut oil continues to gain traction in the global market. Despite macroeconomic challenges in 2022, Dhl's record earnings demonstrate the resilience it has built over the years to weather various crises, according to Alvin Lau, the company's president and CEO. Just when we thought that we are at the tail end of the challenges brought about by the pandemic, 2022 presented a fresh set of challenges which were mostly on the macroeconomic front. Nonetheless, our record earnings this year demonstrated the resilience that we have built over the years through the various crises that we have gone through, said Lau. Although there were volatile prices for some raw materials, such as coconut and palm oil, due to global events like the Russia-Ukraine conflict and Indonesia's temporary palm oil export ban, the exports division recorded a 33% revenue increase as coconut oil continued to gain traction in the global market. Looking ahead, the company is optimistic and focused on its long-term structural growth story, with the upcoming commercial operations of its Batangas plant in the middle of this year expected to provide transformational growth opportunities and enable it to service new and larger customers worldwide. BPI Bank of the Philippine Islands BPI CEO T.G. Limcaoco named new BAP president. Bank of the Philippine Islands CEO Jose Teodoro K. T.G. Limcaoco was appointed the next president of the Bankers Association of the Philippines, the umbrella group comprised of the country's biggest private and government lenders. He replaces East West Banking Corp. Vice Chair Antonio C. Moncupa Jr. I am thankful for the trust that BAP members have placed in me to lead the organization into greater heights, Limcaoco said in a statement on Wednesday. As our country faces renewed challenges from global economic headwinds, there is a call for us in the banking industry to be forces of stability and growth so that our economy will continue to progress, he added. During the General Assembly on March 29, BAP members elected a new set of officers for the term 2023-2024. The newly elected BAP officers include Standard Chartered Bank CEO Lynette V. Ortiz, First Vice President, Rizal Commercial Banking Corp. CEO Eugene S. Acevedo, Second Vice President, Union Bank of the Philippines CEO Edwin R. Bautista, Treasurer and Bank of Commerce CEO Michelangelo R. Aguilar, Secretary. Given the advocacies we have pursued throughout the years and our strong alliance with partners such as the Bangko Sentral ng Pilipinas, the Philippine banking industry continues to be in a strong position to withstand shocks and serve the needs of the Filipino public, Limcaoco said. During his General Assembly speech, Mancupa highlighted the banking organization's efforts to promote inclusive socio-economic development. The Bankers Association of the Philippines is doing its part in the national effort for sustained growth. We have always been working towards better and more responsive financial services to support the economy and improve the lives of Filipinos, Mancupa said. Their various programs include improving payments infrastructure, supporting legislation to promote market-determined resource allocation, and close partnership with regulators on open finance, data privacy, and to better streamline banking reports via the ongoing API XML project. Better financial intermediation will make the economy more efficient by optimizing the allocation of debt capital, improving cost efficiency for financial services, and making financial services more responsive to the growing sophistication of households and businesses, Mancupa said in the statement.
DMC. DMCI Holdings, Inc. DMCI increases cash dividends by 50% after record profit.
Consunji-led DMCI Holdings Inc. pumped up cash dividends by 50% after a rally in commodity prices propelled 2022 profits of the conglomerate to a record high. DMCI said in a stock exchange filing on Wednesday it will pay a total of P9.56 billion in both regular and special cash dividends to stockholders. This was equivalent to 31% of core earnings and above the holding company's dividend policy of paying out 25% of the past year's profits. It is paying a total cash dividend of P0.72 per share common share on April 28 to stockholders on record as of April 27 this year, the filing showed.
DMCI, which owns coal and power producer Semirara Mining and Power Corp., earlier said 2022 net income surged 69% to over P31 billion.
Contributions from units, which include water services, property development, mining and construction, pushed up revenues by 32% to P142.6 billion. DMCI said contributions from Semirara last year expanded by 145% to P22.7 billion as prices jumped in the wake of the Russian invasion of Ukraine and strong demand amid the post-pandemic economic resurgence. DMCI Homes contributed P4.5 billion, up 2%, due to better selling prices and higher other income from forfeitures.
Maynilad Water Services Inc., a venture with Metro Pacific Investments Corp. and Japan's Marubeni, saw net income contribution down by 6% to P1.4 billion as a result of higher costs for light and power, repairs and maintenance, and chemicals.
DMCI mining contributions also grew 7% to P1.3 billion on higher selling prices, while DMCI Power added 28% to P742 million. Construction arm DM Consunji Inc. contributed P587 million, a 55% jump following the completion of building and infrastructure projects. SHLPH Shell Pilipinas Corporation Pilipinas Shell net income up 6% in 2022. Pilipinas Shell Petroleum Corp. reported a 6% climb in its 2022 net income, as the firm reported double-digit growth in its delivery and higher premium fuel penetration during the year. In a regulatory filing, Shell said its net income grew to P4.1 billion from P3.9 billion, while its operational cash flow jumped to P1.8 billion from P1.1 billion. The non-fuel retail business reported a 24% growth in its profit to P2.6 billion, with 217 Shell Select stores, 223 Select Express stores, 93 Deli 2 Go stores, and 479 lube bays across the nation. The commercial fuels segment posted a 19% growth in volume sales, indicating a return to pre-pandemic levels. The lubricants business volume increased by 9%, and carbon-neutral product sales rose 39%. The commercial road transport segment posted a recovery, the aviation business volume grew 51%, and the construction and road volume rose 25%. The company said its shift to renewable energy sources has led to the reduction of 13 kilotons of carbon emissions and has neutralized carbon emissions through the optimization of road and primary transport scheduling. We will continue to explore ways to improve energy efficiency in our operations and in our products and services to better serve our customers and stakeholders, Pilipinos Shell President and CEO Lorelie Kiambao Osile said. We remain a steadfast partner of the government in its nation-building efforts as we power progress for the Philippines, she added. The company is primarily involved in the distribution of refined and imported petroleum products through distribution terminals and supply points, warehouses, and medium-range capable import facilities throughout the country. Shares in Pilipinos Shell closed Wednesday up P0.08 or 0.50% at P16.16 apiece from Tuesday's finish of P16.08. VBL, GMA Integrated News.